Good morning, good afternoon, or good evening, depending where you are on this planet. And welcome to the TGI. Thank God it's Friday, the 28th of February, last day of the month, last trading day, last day of February, the shortest month. Welcome to the TGI Friday, 28th February, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go through a usual regular run through here today, take a look at the calendar, what we've had, what we've got coming up. We'll take a look at the articles from the major news wires. What are the macroeconomic, geopolitical, central bank events that are impacting financial markets right here, right now. And we'll take a look at some charts, see what's going on in the markets. So the first thing in here, let's take a look at the calendar. We've had some somewhat interesting data out of out of Europe this morning. House price data out of the UK higher than expected, obviously potentially inflationary. French inflation data in here you can see slightly lower than expected, but also GDP lower than expected, a little bit disappointing. German unemployment data slightly better than expected, so a kind of real mixed bag. In just under half an hour, we get German CPI data, so we'll certainly be keeping an eye on that. Preliminary data for February, so that's early data. Just slightly important, to see how the inflation is doing globally. European inflation is actually kind of better than US and UK inflation, softer, moving back towards where it should be, around the 2% level. So we'll certainly be watching that. More importantly, though, in just under 1 hour now, 58 minutes, we have the PCI data, PCE data even. PCE data in here for the US. And this core PCE data is important data. It's the Fed's preferred measure of inflation that the Fed tell us is what they look at as their inflation measure. So we're certainly keeping an eye on that. An inflationary number would probably be quite poor for stocks. Non-inflationary, okay, less, lower than expected, good for stocks is how we're going to read this. So certainly keeping an eye on that today. It's going to be important. Don't forget, later on today, 9:45 Eastern, we also get Chicago PMI. It doesn't usually have a big impact on market, but nevertheless, keeping an eye on that. So Chicago PMI a little later, 9:45. In just under 1 hour, the PCE data is the main focus in here for the day. What's going on headlines-wise? Well, tariffs back on take center stage, hitting markets yesterday. Partly to do also, though, we had not just tariffs, but we had the Nvidia numbers back on Wednesday night, better than expected. Market was only slightly up on better. The market really was much better than expected to rally. And even though Nvidia did push higher in initial overnight trading and then in early trading, big sell-off for Nvidia has ended up being a very very negative day for Nvidia. Pulled the broader market down with it, but this was also being driven by not only Trump, talking about tariffs, but also China vowing to counter Donald Trump's latest trade threats with all necessary measures. So tit for tat tariffs, not good for global trade, not good for the global economy, and so sending stocks lower in here. And we see that again. Traders flee risk, seek havens to hedge uncertain stock markets. So again in here, the uncertainty around both tariffs, the uncertainty around potential inflationary pressures from tariffs, and the uncertainty around the geopolitical risk globally. Less so Gaza, more importantly, what's going on with the negotiations around Ukraine/Russia in here, having negative effects. So we're seeing safe havens doing well. So we're seeing safe sectors like consumer staples take over S&P 500 from tech. So sector-wise, those safe haven sectors doing better. Bond markets, as we've been looking at, are going up in price, down in yield of safe havens. And actually, one that is something that's seen as a risky asset alongside stocks is actually crypto. Crypto having a big sell-off. Bitcoin now down 25% from its all-time highs. So looking today, so a big sell-off in crypto again, and that's seen as more of a risk asset rather than a safe haven. So generally across the board, safe havens going bid, and we're seeing significant sell-offs in here on riskier asset stocks. Obviously got hit yesterday. Partly Nvidia, disappointment really on Nvidia, even though the numbers were a lot better than expected, and partly to do with the fact that the tit for tat going on in the world of tariffs. So that's not helping matters in the slightest. What else have you? So stock futures though actually have rebounded slightly, having hit got significant yesterday ahead of the PCE data we have coming up in just under the hour. We do see stock futures having a slight rebound in this morning, but routing Bitcoin worsens as it falls over 25%. We've already mentioned that. Trump says imports from China face an additional 10% levy and potential tit for tat coming from China. Futures in sharpest focus shifts to key inflation data. So we mentioned that already. Same sort of thing out of Reuters. Global stocks in here got smashed yesterday. So Asian, US stocks are obviously lower. European stocks also. Asia following US down this morning. So nearly 3% on the Nikkei and over 3% on the Hang Seng. European markets stabilising a bit. They did get hit anyway yesterday with FTSE actually rebounding 1/3% with US futures this morning, but German DAX and the French CAC between 1/4 and 1/3% lower this morning. And as we said in here, futures actually had a slight rebound, but it is really slight considering the damage inflicted yesterday. The S&P's actually bounced 0.4 and about 1/3% higher on the Nasdaq this morning, but the path of least resistance at the moment remains down. That could all turn around, obviously, on the PCE data. So we're very much watching the PCE data at the moment. What we are seeing, however, is an increased likelihood that we get more rate cuts now this year. So although for the next meeting in March, we're still expecting unchanged. If we go to June, July now, you'll see in June now only a 29% chance. This was sitting around 50-50 of a cut or not. June now, 29% chance that rates are unchanged at the June meeting. And if we go even into May now, we're seeing now a 70% chance that they're unchanged in May. But there's now an increasing chance we get a rate cut in May. Only a 30% chance. But now, very much expectation now we get a rate cut by June. So only a 28% chance that rates are unchanged by June. And by July, if you look in here, unchanged is only 18%. But if we add these together, this is for one rate cut by July. So we've got 45, 65, 75, say 74%. So there's an ounce. So I'm sorry, that's wrong because we've got 29. So we've got 35, 65% here. Sorry, we've got 35% chance we might get two rate cuts or one big rate cut, 50%, a 0.5%, rate cut in here, 50 basis point rate cut by July, and then now by the end of the year, now we're pricing in here. This is the chance of two rate cuts. So we've got 31, 48%, 52% for two rate cuts. So there's a chance we might get even up to now three rate cuts. 50-50 chance of three rate cuts or more now going into the end of the year. So increasing chances. So we're almost adding in an extra rate cut now over the last week or so because of concerns around geopolitical risk, because of concerns around potentially tit for tat, loss in GDP, falling GDP because of tit for tat tariffs in here. So concerns around the US economy, concerns around the global economy, concerns around geopolitical risk, increasing the chances of rate cuts in here, but not doing enough to stave off the losses that we're seeing in markets. And we obviously see bond yields continue to slide out, even though we saw it kind of push significantly lower in here overnight in yields again, and now backing up slightly to slightly higher yields. But overall the path has been significantly to lower yields in here, and this is like a safe haven bid, really, partly a safe haven bid into bonds. US bonds tearing higher right the way across the board in here, but also at the short end we're tearing higher, and that's because of an anticipation of potentially more significant rate cuts coming out of the US and out of the Fed. Stocks looking poor in here. Nasdaq now taking out all of these lows in here, going back for all of this year and into last year. And this looks now potentially like a bigger topping pattern. So there is risk that we got almost like a double top pattern in here confirmed on the Nasdaq. S&P in here not quite as negative, but getting more negative. If we take out this low here at 58.09, it looks really quite negative for the S&P. If we go and take a look in here at the Nasdaq, you'll see those lows all undercut. Not only these lows in here for the double top pattern here, undercut this low here from where are we? I can't see the so in here from 13th of January. Not only undercutting that low, but also undercutting this low in here from back in November of last year. So undercutting those lows yesterday, and we have seen a very slight rebound, but this looks like a potential bigger topping pattern, either a very wonky head and shoulders pattern or a double top pattern in here on the Nasdaq. Haven't quite got as negative, on the S&P. We're still holding above this low here and this low over here. So these are the equivalent lows. So they are, that's the low there are flagged at 58.09, right? Let's just double check that. Is the one, 58.09. Then we've got this other low in here across here at 57.84. So we're still above those. We are trying to stage a rebound, but considering not only the sell-off that we've seen over the last week, but the sell-off yesterday, It's a bit of a lackluster bounce we'll see here on if you go to the shorter term chart. And for me, we're already rolling a little bit back lower in here already, so it's a lackluster bounce. All the risk remains lower going into today. However, just to qualify that by saying that we do have that PCE number, it's an important piece of data. If we see a slowdown in inflation, it might then green light more aggressive rate cuts, and we could see a rebound in stocks. However, if PCE is high, it could be very negative. We could see a bit of carnage to the downside. So bearish going into the day, remaining bearish going into the day, unless we get a turnaround on that PCE data. Don't forget, we also get a little bit later. We still get the where are we? The Chicago PMI at 9:45 Eastern. I'm going to wrap it up there and leave you with that, guys. I'm going to wish you all a great trading day. Going to wish you all a great weekend too. And we'll be back with you with another Bull versus Bear on Monday. Take care. Stay safe. Bye.